Imagine owning a piece of prime real estate without ever needing to buy a single building or pay for costly maintenance. Sounds impossible, right? But in Singapore, it's as easy as buying a share. Through real estate investment trusts, or REITs, you can invest in high-value properties and start earning income like a landlord without the headaches. In this video, we'll break down the basics of asset classes and show you how REITs, like the popular Mapletree Industrial Trust, make it simple to build wealth in real estate. No mortgage required. A real estate investment trust, or REITs, is a company that owns, operates, or finances income-producing real estate. REITs pool money from multiple investors to purchase and manage properties such as office buildings, shopping malls, hotels, and warehouses. This allows individuals to invest in large-scale commercial real estate without needing to buy or manage the property directly. REITs typically generate income through rents or leasing, and by law, they must distribute a significant portion of their profits as dividends, making them an attractive option for income-focused investors. Don't forget to subscribe, hit the like button, and share it with others. It really helps the YouTube algorithm promote the channel, allowing us to reach more people and bring you even more valuable content. Thanks for your support. Chapter 1. The Value of Long-Term Investments. Long-term investments, those held over many years, allow investors to weather market fluctuations and benefit from growth over time. REITs like Mapletree Industrial Trust are designed for long-term wealth building as they provide a steady stream of income through rental properties while the value of the underlying assets appreciates. Mapletree Industrial Trust has consistently demonstrated the benefits of long-term investing by maintaining a strong portfolio of properties in Singapore and abroad, providing regular returns to its investors. Chapter 2. Understanding property as an investment. Property is a key asset class in building wealth. Owning property, either directly or through a REIT, offers two main benefits: rental income and capital appreciation. When you invest in a REIT like Mapletree Industrial Trust, you're essentially owning a small share of multiple properties, such as high-tech industrial parks and data centers. Mapletree Industrial Trust manages over 140 properties across Singapore, North America, and Japan, with a portfolio valued at around 8.9 billion. This diverse range of industrial properties strengthens its position as a key player in the real estate investment sector, providing steady income and growth opportunities for its investors. Chapter 3. Key Metrics for Evaluating REITs. To make smart investment decisions, understanding key metrics that evaluate the performance of REITs is crucial. Let's use Mapletree Industrial Trust as an example to show why it stands out as an attractive investment. First, occupancy rate. A high occupancy rate indicates that a REIT's properties are in demand and well managed. Mapletree Industrial Trust's impressive occupancy rate of around 93.8% highlights its ability to keep its properties leased and consistently generate rental income. This steady demand ensures a reliable revenue stream, which is appealing for investors seeking stability. Second, rental revision and reversion rates. These rates measure how rental prices change when leases are renewed. A positive rental reversion, like Mapletree Industrial Trust's recent 3% increase, signals that the trust can command higher rents, which boosts income for investors. This upward trend reflects the strength and appeal of Mapletree Industrial Trust's properties in the market. Lastly, net property income, or NPI. NPI shows how profitable a REIT's properties are after covering expenses like maintenance. In the first quarter of fiscal year 2024-25, Mapletree Industrial Trust's NPI grew by 0.6% thanks to reduced maintenance costs in Singapore. This increase in profitability is a testament to Mapletree Industrial Trust's efficient management, making it an attractive choice for investors seeking both growth and income potential. Chapter 4. Financial Health of REITs. A REIT's financial health is crucial for long-term investors, as it impacts stability, growth potential, and income distribution. Let's explore key indicators using Mapletree Industrial Trust, or MIT, to see why it's a strong investment choice. First, the gearing ratio. This ratio shows how much debt a REIT has relative to its total assets. In Singapore, REITs are required to maintain a gearing ratio below 45% to limit risk. MIT has a healthy gearing ratio of 37.4%, well within the regulatory limit, indicating it isn't over-leveraged. This financial discipline ensures that MIT can manage its debt responsibly, giving investors confidence in its long-term stability. Next, the debt expiry profile. A well-distributed debt expiry profile lowers refinancing risks by preventing large debts from maturing all at once. MIT's debt profile is spread out, with its longest debt maturing in financial year 2038 to 39, reducing the pressure of sudden repayments and allowing the REIT to manage its liabilities efficiently. This strategic approach to debt management minimizes refinancing risks and enhances financial resilience. Finally, distribution per unit, or DPU. DPU is the income distributed to investors per share, a key metric for income-focused investors. MIT has consistently delivered stable DPUs, with the latest DPU at 13.80 Singapore cents for financial year 2023-24. This steady income distribution reflects MIT's strong cash flow and operational performance, making it a reliable choice for investors seeking regular returns. MIT's combination of low gearing, well-managed debt, and stable distributions make it an attractive investment for those looking for both financial security and long-term growth potential. Chapter 5. Increasing safety in property investments. Investing always comes with risks, but there are effective strategies to mitigate them. In property investments, diversification is one of the most important ways to reduce exposure to risk. REITs, like Mapletree Industrial Trust, employ this strategy by spreading their investments across various property types and geographic locations, rather than relying on a single property or market. This diversification helps cushion against market downturns or unexpected challenges in any one area, creating more stable and predictable returns for investors. For example, MIT's portfolio consists of a wide range of industrial properties, including data centers, business parks, and manufacturing facilities, across both Singapore, United States, and Japan. By operating in different regions and sectors, MIT minimizes the impact of regional market fluctuations or economic slowdowns. If one market experiences a downturn, the performance in another region can help offset those losses. This multi-region, multi-property strategy provides an added layer of security for investors, making MIT a safer and more resilient investment choice. Chapter 6. The Impact of Experience and Reputation. In the investment world, a REIT's reputation and experience can significantly benefit investors. REITs, like Mapletree Industrial Trust, managed by experienced teams, tend to make smarter decisions that lead to stable and attractive returns. MIT has built a strong reputation due to its consistent performance, making it a trusted choice for both new and seasoned investors. Over the past few years, MIT has implemented several actions to enhance shareholder value, allowing investors to reap the rewards. For example, MIT has acquired data centers and industrial properties in North America and Asia, including a data center in Osaka, Japan. These strategic acquisitions diversify MIT's portfolio and boost rental income, contributing to a stronger income base and enabling the trust to maintain or even grow its distribution per unit, or DPU. Additionally, MIT has invested in upgrading existing properties to attract higher-paying tenants. By enhancing its facilities, MIT has improved rental yields, positively impacting overall profitability. Moreover, MIT's proactive capital management strategies, such as refinancing debts at lower interest rates, have reduced financing costs and increased cash flow. This means a larger portion of income can be distributed to investors, reinforcing MIT's reputation as a reliable income-generating investment. In summary, MIT's experienced management team uses its market knowledge to implement strategies that not only enhance financial performance, but also provide investors with stable returns and a dependable investment option. Conclusion: grasping the fundamentals of asset classes and how REITs like Mapletree Industrial Trust operate is essential for making informed investment decisions. By focusing on long-term investments, leveraging key performance metrics, and diversifying your portfolio, you can steadily build wealth over time. REITs provide an accessible and reliable pathway for both new and experienced investors to gain exposure to real estate without the headaches of property management. They allow you to benefit from the stability and income potential of real estate while maintaining flexibility in your investment strategy. As you continue your investing journey, remember that staying informed and adopting a long-term perspective will empower you to make the best choices for your financial future. If you find this content valuable, please take a moment to like, share, and subscribe to our channel for more insights on investing and personal finance. Your support helps us reach more people and create even more valuable content. Thank you for being part of our community.